Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, Donald Trump confronts his first New York fraud claim in court this Monday on his first day of his trial. As well as that, we've got US Treasury yields hitting their 16-year high amid, worries or at least expectations of US economy growth and therefore rates being expected to be held higher for longer. As well as that, we've got lots happening on the charts, especially in relation to the Dow Jones and the dollar, as well as that we've got lots of economic data coming out today, along with lots of decisions around Aussie's interest rate. But we'll come to that near the end, sorry. But let's get straight into it. So first off, we're starting with Donald Trump. Now, the first day of Donald Trump's civil fraud trial began on Monday in a dramatic fashion in the Manhattan court. Now, we know Donald Trump's been dealing with a great deal of trials and criminal proceedings around numerous events, such as his tax returns, as we'll talk about in a second, and also more so in relation to his valuations of his net worth, which have, as a result, been allowed him to be accused of possible fraud in relation to him taking loans out at more advantageous rates than he was actually able to, and this is because he's apparently inflated his net worth through his properties, and this is what they're trying to get him on, basically. But he's also had certain other criminal proceedings in relation to his disagreement with the result of the 2020 presidential election, as well as other issues around the election and with his businesses. But let's get straight into, as well as his previous partners or previous people that he's hung out with. But let's get straight into it. So the opening argument provided by the prosecutor included clips of the depositions of Eric Trump, Donald Trump Jr. as well, and Alan Weisselberg, who ended up serving 5 months in jail for tax fraud. The day also included Trump in the courtroom watching his own testimony from April on a video monitor, from where he was asked under oath whether Weisselberg was responsible for ensuring that Donald Trump's personal financial statement complied with the accounting principles, to which at the time he said yes. And this took place around March of this year. And so it's he's in a tough situation here where, he's admitted to the fact that this guy's basically looked after his accounting and has adhered to the correct accounting principles. But however, this guy has now been prosecuted on tax fraud. So it causes some areas of controversy, obviously. And what followed was the judge asking him whether he lied then or whether he's lying now. So essentially, judge is asking him why he's saying yes to that in March, but why he's saying no to him, now. And the same judge last week ruled that Trump had committed repeated fraud by inflating the value of his assets. And we spoke about this last week. We were kind of talking about how the judge had ruled that, Trump had inflated his assets in order to gain more favourable loans to pay back, with lower interest rates, so he could invest more money into his businesses. That said, Trump kind of responded to that by saying, well, we paid back all the loans, so what are you really trying to get us on here? We've paid the money that you've demanded, and we'll come to more about Trump's response to all these accusations in a second. Now, the trial will determine what financial penalties Trump will have to pay, if any, and whether him and his co-defendants should be able to carry out business proceedings again in New York. And obviously, this is not the same severity of him being put in prison for denying the election, however, or like creating a coup. Some have called for, said that he's done. This is more so in relation to his business empire and whether his business empire should be broken up and he should never be able to run a business again, really. Now, as I was saying, this is a civil matter, so it will not carry any prison time. However, it will cause Trump's business empire to be dismantled. And this is a big thing for Trump. After all, he spent basically his whole life building up and being this amazing business owner, growing such into so many businesses. And to have that all destroyed, obviously, he wants to avoid that. And Wallace argued in his opening statement, which is the prosecutor, by the way, that Trump knowingly lied about his net worth in order to secure bank loans on better terms, saying, the defendants knew that a high net worth was necessary to obtain and maintain certain financial benefits. And this is in relation to having low interest rate loans, which therefore means that you only have to pay back a smaller amount than you would otherwise if your net worth is lower. And this is because if your net worth is lower, you can't offer up as much collateral, basically meaning if you can't pay back that bond, if you can't pay back that loan, the bank is basically going to take your assets, such as your properties, which in this case Trump is being accused of inflating the value of, and if your value is higher, obviously, for your properties, then obviously you have more collateral, and so the bank feels safer offering you more money at a lower interest rate. And this is kind of what he's being accused of here. Williams even played the video deposition of Michael Cohen, who was Trump's personal lawyer, which said when calculating Trump's net worth, it was basically backing in numbers to obtain the number that Trump wanted. So obviously this is not good news for Trump, and really not good, supporting evidence for Trump's defense. Now, Trump's lawyer, in response, however, said that all former statements of Trump's financials were true and accurate in all material aspects. So basically, they're still holding the line, saying that, look, although this guy's saying, all of this, our financials are correct. They do have material evidence and they're strong financials. Therefore, there's nothing you can get us on here. And commenting on the valuation, she also added, saying that there are many different ways to value assets and all of them are accurate, even if you are given different results. And obviously this is the case, considering that, if you're valuing a stock, for example, you could value it in many different ways, looking at cash flow, looking at certain, macroeconomic events to evaluate it. And all of these technically could be considered fair valuations. However, their results may be vastly different, obviously, because you're looking at different areas to value. But that said, how much of this can really be attributed the same to, certain accounting valuations in relation to housing? That we don't know so much, considering how different, the actual valuations were from the actual figures that other people were valuing at. And as I said last week, some cases there was 3 times, the valuation that other people believed the properties were valued at. Now, Trump's lawyer also noted that Deutsche had carried, and this is the bank that loaned Trump the majority of his loans, and she did comment on Deutsche, saying they had carried out their own examination of his assets as well. So basically saying, look, this isn't all on us. If Deutsche is valuing it and they don't deem the valuations over the odds, then how can you say that we're committing fraud? And as Trump arrived at the courthouse, he did comment that this is a continuation of the single greatest witch hunt of all time, with Trump, continuing this message, essentially in relation to him believing that, the political side is against him, the left is against him, and the left has hijacked the judiciary, as well as, the executive, obviously with Biden in power, as well as, the the legislative branch, and therefore all these branches of government are basically trying to get him on this witch hunt, and he's basically saying that he's putting up the fight so he doesn't get put in prison for things he's not guilty of. And the trial is now set to last until this December, as more trials begin to weigh on Trump's campaign next year. So it'll be really interesting to see how all these trials end up weighing on Trump's performance going into next year's presidential election. But that's all for Trump. Let's get straight onto the next article, where US Treasury yields have hit a 16-year high as bond rout resumes. Now, the 10-year Treasury yield did rise 0.13 percentage points to 4.7%, reaching the highest levels in 16 years. And this all came after better than expected manufacturing data, which bolstered investors' belief that the US economy was in good shape. And this came out yesterday, essentially saying, we'll come to it near the end as well, but basically manufacturing data was predicted to be lower than it actually ended up coming out as. And obviously, if you've got positive, or at least more positive manufacturing data, it does show good signs for the economy. And if the economy is doing well and inflation is high, this means that the central bank has more room to increase rates. And when rates go up, the interest on holding your money in just a bank, has more value, and therefore people take their money out of bonds and put them into banks, and therefore the value of the bond drops and the yield rises. This is the general, thesis of what's going on here. And bond prices around the world have fallen sharply in recent weeks amid an avalanche of Treasury price issuance by the US government and a growing belief among investors that central banks will have to hold rates at a high level for an extended period. And this is what we've been talking about a lot recently, is the Fed's rhetoric, which did come out maybe last week or the week before, around keeping rates higher for longer, as well as possibly even raising rates later this year, which came as a surprise to many people who didn't actually expect rates to be raised this year anymore. They thought we were at the peak. And so rates were probably going to be coming down by the end of next year's second quarter. However, this does not seem the case anymore, and signs of a robust growth in the US make rate cuts from the Federal Reserve over coming years less likely, because if the economy is doing good, you're able to put so much effort into raising rates and preventing inflation and lowering inflation through that monetary policy measure without hurting the economy too much. Now, factory activity, as measured by the ISM Manufacturing Index, contracted by the smallest amount in nearly a year in September, which was a recovery from the multi-year lows in June. Monday's moves marks the end of a short recovery for bonds, with yields falling from recent highs of late last week as a result of falling inflation in the US and EU. And this is what we spoke about, last week when we were forecasting what data was coming out and what might happen. Basically, coming into the end of last week, EU data, I believe EU inflation ended up being 44.6% in contrast to the forecast of 4.7%. So obviously that was a very positive view for the euro. However, if inflation is falling, this also means that rates are likely to come down sooner. Therefore, the euro has seen a decline since then, and that response for the US as well, which had more better data for inflation, also caused a sell-off in the dollar and a buyback of bonds. However, this does seem to have declined now following this more recent data. And in the futures market, traders are now betting that interest rates will be at 4.7% by the end of 2024. Implying 2 or 3 rate cuts from the current range of 5.25 to 5.5%. And this is in contrast to earlier this month, when traders were betting that the Fed would cut rates by 4 or 5 times by then. So a big change. Obviously rates do seem like they're going to be staying higher for longer, with a possibility of rates even being raised this year. But that's all for the articles. Next to talk about really is the charts. But the first thing to really talk about, obviously, is the Dow Jones, which kind of surprisingly, following the manufacturing data, because it still was a contraction, we did see a sell-off in the Dow Jones. or at least because, maybe the fact that there was more positive manufacturing data, this did mean that, the economy looked better, and therefore rates are more likely to go higher, and therefore, this is going to be impacting US industries a lot that rely on credit to, build and, create basically and expand. And therefore, we've seen a sell-off in the Dow Jones, which has kind of made a double bottom here. So it'll be interesting to see whether we'll make a move to the highs, make a move higher now, considering we've kind of seen this divergence here on the RSI, where, although we've made lows on the RSI, we've actually made highs. So it'll be interesting to see how the Dow Jones will respond to that. As well as that, on the Nasdaq, we've kind of seen opposite image, with the the Nasdaq nearly creating a double top. So it'll be interesting to see whether the Nasdaq can break higher, or in fact it will react with this 61.8% area in line with the fundamentals, which are basically would be negative for the Nasdaq because of rates staying higher for longer and rates possibly going up later this year. So it'll be interesting to see how that plays out. But next to talk about really is the dollar, which is making new highs. Now, we did speak about how the dollar did come into this 50% Fibonacci area where there was strong liquidity, and from that it's really taken a bullish move, rallying and breaking prior highs, and therefore the dollar really does seem in a bullish position here, continuing to make highs not seen since 2022. So it'll be interesting to see how far the dollar can really go until it once again retraces. But I'm sure it will retrace or have some issues of consolidation come the next data release. And obviously later this week we do have NFP, so keep your eye out for that. Next to talk about, though, still on the dollar, but is Euro USD, which following the manufacturing data this week, yesterday, which did show the rates were more likely to stay higher for longer because manufacturing industries were beginning to expand a bit more. This did cause a sell-off in the euro as more money went into the dollar, expecting those higher rates. Therefore, we've broken below these prior lows, and it does seem that this 38.2% Fibonacci area, as well as the 50% Fibonacci area, were significant in causing a sell-off in the euro alongside those fundamentals. So it'll be interesting to see whether the euro can make it to this minus 27.2% Fibonacci area. As well as that, on pound yen, it does seem to be continuing lower, with this retest of this channel and of the 78.6% Fibonacci area seeming very significant considering the sell-off that we've now seen. So it'll be interesting to see whether it will actually break below these prior lows, or in fact it will create a triple bottom or some sort of thing like that. Maybe a double a shoulders and head pattern, inverse head and shoulders pattern to maybe move higher. But we'll see what happens with that. As well as that, Bitcoin's in a really interesting area because it has broken above. It does seem that this trend line was very significant in causing a rally for Bitcoin, which is now broken above these prior highs, and it'll be interesting to see whether it will retest these prior highs before going higher, or in fact this is once again just another false breakout, which Bitcoin's been experiencing a lot recently, and whether it will break back below into this new kind of area of accumulation which we've been seeing forming. But next to talk about, I guess, is gold, which following the strong news for the dollar is continuing to fall off a cliff. This is looking worrying for gold. It will be very interesting to see whether it can really find its bottom around these areas of liquidity at the 1808 level, or the 1816 level, and whether it will really find some liquidity around that area, because it does seem to be falling off a cliff and really struggling to find a bottom here. So it'll be interesting to see how that plays out. As well as that, and lastly, oil continues to fall, so it does seem commodities are being hit hard, and despite expectations of Brent crude oil reaching the $100 a mark for the oil, it does seem to have declined and is now reaching this area of liquidity once tested before at the $91 area. So it'll be interesting to see whether it can gain some liquidity and move to the upside from there, and likewise for the US oil market, which has also seen a decline from making previous highs. So it'll be interesting to see how that plays out, so keep your eye on oil. But that's all for the charts really. lastly, to talk about obviously is the economic calendar, where we don't actually have too much data coming out today. But however, there is two, Fed officials speeches being made, so keep your eyes out on that to hear how the Fed is shaping its rhetoric. As well as that, we've also got the Aussie interest rate decision, which will obviously have a great impact on any Aussie pairs. As well as that, we also have Swiss inflation rate data coming out, so obviously that will play a great deal into shaping the franc's foreign exchange rate. As well as that, we've also got Aussie housing market data. But that's all for our data really today. But lots is happening. Keep your eyes on the the news. Keep your eyes on the charts. The charts are in a really interesting position at the moment. Really positive for the dollar, but kind of weak for commodities. So keep your eyes on that. But yeah, that's really all from us at Wildwood Capital. Have a great trading day this Tuesday. See you later. Bye.